Maple Finance, the largest unsecured crypto lending platform, is grappling with a $54 million debt crisis while gearing up for a major system upgrade. The project's MPL token has plunged and depositors are likely to stomach big losses. Joining us now is Sid Powell. He is the CEO of Maple Finance. Welcome, Sid. So maybe you could perhaps walk us through, first of all, how Maple Finance got into this debt crisis.
Yeah, sure. So following the FTX collapse, what we saw was that loans on the platform wound down. And so you ended up with a reduced pool. But it's important to note that defaults happen in any lending platform. And what's important here is that Maple provides infrastructure and support and tools for the delegates so that these defaults can be managed better in the future. And this includes tooling like managing withdrawals, being able to handle defaults earlier when there's apparent distress from a borrower, and being able to provide clear, transparent reporting and dashboards for people who are using the platform. So these are all aspects that we've introduced for V2, and that we're looking forward to rolling out as part of this new platform upgrade.
So Sid,
Is there a problem inherently with the crypto lender model not working? We're seeing Celsius as well as Voyager tanking, Nexo's leaving the United States. What's going on here? Does the model just not work?
No, I think, look, it's important to note. So anyone is going to have apprehensions about under-collateralized lending when you see what's happened since FTX. But it's important to note that under-collateralized lending is in fact the backbone of traditional finance. So very large companies like Apple do not go and post collateral when they want to borrow from banks or from debt capital markets. And I think what we need to do here is separate a credit event and a downturn in the credit cycle with the viability of under-collateralized lending longer term. And so this is going to continue into the future, but it really highlights that what's important for us now is separating lending to one sector from lending as a platform and the value of a lending business. So with Maple 2.0, we're actually indifferent to which sector is lent to, and one of the commercial focuses of the platform now is offering a more diverse set of opportunities, whether it's lending to other sectors, so diversifying to other crypto native borrowing verticals, whether it be Web3 infrastructure or diversifying outside of crypto. So we've got projects at the moment where we'd look at lending against treasuries, reinsurance type lending, as well as lending against trade receivables. But all of these are viable lending businesses, but it represents that what we need is a more diverse ecosystem and also a way to attract new and high quality delegates who can conduct those lending businesses. But I certainly don't think that lending is going to go away.
So Sid, we'll get to Maple 2.0 because there is an aspect that with what happened to Solana in this, but I kind of wanted, I do want to go back to Christine's question ultimately, and it's about that, what exactly happened to Maple Finance to begin with, and you mentioned credit events, and do you think that basically credit events, if you will, such as FTX, were underestimated in how it would necessarily play out? That basically these, I've said that crypto is not just it doesn't just have a black swan event, it's basically a flock of black swans, and that the crypto markets themselves have been underestimating these events constantly. Do you see that as a problem in the model? What happened exactly with Maple Finance that caused this issue? Like, can you walk my mom through this, who, she might be watching right now and she might not entirely understand what you guys do and how FTX's collapse affected you?
Yeah, sure. It's a good place to start. So the way that Maple works is that you have different pools. Each pool will have will have multiple different borrowers in it, but each pool has a manager. So we call them a delegate. They're responsible for underwriting the borrowers and negotiating commercial terms with them and then servicing those loans. What happened on Maple is that since second half of the year, you had different collapses like 3AC, Luna, Celsius, and then in November you had FTX. So what happened is that post FTX, you had a wind down in the pools where you had borrowers repaying loans, which caused the pools to contract in size. The borrower who's been most impacted was orthogonal trading, who had funds on FTX, and that caused them to default on their loan. So that is the credit event in particular that's caused the current issues. But what's important to note is that on the platform so far, we've done about $2 billion in loans. So what you're looking at is whilst this default has caught people's attention, this really represents the second borrower on the platform to default in over $2 billion of loans done. And overall, this level of default, about 52 million since we've started, represents about 2.5%. So I don't think it necessarily that you can necessarily conclude that lending as a whole or lending to this sector is necessarily flawed from the outset. But what it does highlight is that you do want to have diversified end borrowing industries. So if you look at the loans that have been done to date, it's predominantly been to this one sector, so market makers and arbitrage trading firms. But our ultimate vision is to provide a debt capital market on chain. And so this shouldn't be beholden to one single sector. And that's why, in light of this, we are pushing for expansion into other sectors. So increasingly into real-world asset lending and other crypto-native industries like Web3 infrastructure.
So now, while this is all going on, you're changing your views on Solana. You're basically going away from it in this Maple 2.0. Is this basically the death of Solana in the sense that, I mean, not that you guys are killing it, but nonetheless, I mean, do you look at this and say, you know what, this is a platform that's not going to survive. It's too tied to FTX and Sam Bankman-Fried, and it doesn't provide, it just has such a bad market reputation that maybe there's no need for us to be involved in this, and it's caused more harm than good. Is that what you're saying with all of this?
With Solana, I think the platform can survive overall. What we've made a decision here to do is, tactically, we have limited resources as a startup. So we've decided to consolidate around the chain where we see the most TVL. What we saw with Solana was a huge drop in the TVL there. We still retain, the smart contracts are all still live. We have the ability to turn those on again and resume lending there. But what we have to do is make a tactical play that, as a startup with limited resources, we need to consolidate efforts. I think all startups should be doing the same thing in what could be a protracted bear market environment. And what we've made the decision to do is concentrate on building new features on our Ethereum product. And so this means introducing the type of tooling that will make Maple more usable as infrastructure for TradFi lenders who do want to come into the space. So things like open term loans, active collateral management. These are things that we can build faster if we just concentrate on building on one blockchain at the moment.
Can you talk more about Maple 2.0 and how it is the solution, or at least makes it less risky for the crypto lender protocol?
Definitely. So with Maple 2.0, what we really focused on doing was learning some of the lessons that came out of the June-July volatility in the space. So it's worth noting that with smart contract development and building, it does take some time. You need to build the smart contracts, have them audited, and then roll them out. And you have to test, because you can't just, it's not something you can just upgrade on a daily basis. And so with Maple 2.0, what we've really focused on is, our role is not so much determining who borrows on the platform, but what we do want to do is provide the right type of tooling to support delegates who want to run a lending business, and also to attract more high quality delegates into the space. So with Maple 2.0, one of the most apparent and important features we've done is changing the way withdrawals occur. So previously, people had to wait for a lockup to elapse, and then they also had to withdraw in sequence. So basically, people could front run each other. This was a problem. It wasn't fair. It wasn't equitable. And so what we've done now is we've shifted so that there's no lockup, and people can withdraw in periods. So each withdrawal period, you or I could elect to withdraw, and we'll each have access to the cash that's available in the pool, instead of either me being able to get out all of my funds before you, or you being able to get out all of your funds before me, which was creating situations where people would try and front run defaults, and it would lead to a less equitable outcome. So that's one of the main things we've done with V2. The other elements that are really important are that we have the ability to take defaults earlier on. So where you see a borrower who's in distress, that impairment can be taken right away, so that it's applied or socialized across the larger number of lenders. And so each individual lender takes a smaller haircut or impairment there. So we think that's a huge improvement as well. The other thing we have going on is that interest will auto compound on a block by block basis, and then the protocol will also be more interoperable with other platforms in the space. And so this includes an SDK as well as having the 4626 protocol standard.